Hello there, Maverick traders. This is Rob Reinhold, and it is July 17th, and we've got a great trading week on our hands. In this session, we're going to go over the trading day, look at some of the news, take a look at the broad markets that sold off pretty hard, and then we always like to forget everything we know before this day and rescore the markets based on technicals and technicals only. Then we're going to take those scores. We're going to pair up the strongest currencies against the weakest currencies. Those are going to be our target pairs for the next 24 hours.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Today we had a really big sell-off in the entire market. The Nasdaq fell almost 3%, the S&P down about 1.5%. But we're going to take a look inside because really this is the story of rotation. The big cap tech stocks are getting creamed and everything else is actually doing really well. In the world of CPI, we got the CPI out of New Zealand last night and it was lower than expected. Now, the Kiwi reacted negatively to that at first, but then at the end of the day, the Kiwi had actually ended up being positive, one of the three positive stock or currencies on the day. We also got the UK CPI higher than expected. Look, we've loved the pound lately. The pound has been great. We had higher than expected GDP. Now we've got higher CPI. Boy, pound is really still looking very nicely here. If we take a look at the action today, we can see that we did get a very classic risk-off move. We had the yen spike 1%, the Swiss franc up 0.8%. These two are very risk-off. We usually see the dollar move with those on a risk-off move, but you can see the dollar weakened. These were the three currencies we talked about being short this week. And for the first 2 days, the yen and the Swiss franc didn't pull back. And we had a little bump up here today. But over the last 3 days, the US dollar has been weak. So we're definitely going to be keying on the US dollar. With that being said, the yen and the Swiss franc are both likely setting up for really good short opportunities, but is definitely not ready yet. CAD that we've liked on the short side has been the weakest currency. And we really have liked pound CAD. I've been in a pound CAD trade for about a week now, and it's just working fantastic. The Aussie has also turned from one of the stronger currencies to the weaker currencies. So lots of stuff going on in the currency market. If you go check out all the other markets, the stock markets, the commodities, you can see it was mostly a down day. S&P, VT down, 1.3%. Crypto down 1%. That's a really good move based on the huge rally we've seen over the last 3 days. Gold and oil up 0.5% down or 0.5%. Here's the moves in Bitcoin. We can see that the selling has been in the secondary coins. You can see Bitcoin and Ethereum held in really nicely. Remember, these have all experienced about a 10% rally lately. The fact that we only gave up about 0.2% on a day when the stock market was down 3%, that's a really solid stay. We're going to take a look at crypto because if you remember, I said we needed to see a bottom, we needed to see a new swing high and a pullback that was bought. This is the pullback. Now we get to see if it's being bought in the next couple of days. Now if we take a look at the S&P, it is still an uptrend. Yes, this is an ugly candle. This was an ugly day. We opened and we closed at our low, likely telling us there is more selling ahead. However, we are right in an area of support. We have a couple of candles here that touch this level. And then ultimately, we're going to have some support at the 20-day moving average. And then we could have some support down here. As you can see, there's lots of points where the S&P technically should bounce. I don't think there's any reason at all, even after this ugly candle, to get negative whatsoever on stock market and equities. And in fact, if we take a look at this RSP chart, this is the equal weighted S&P chart. So basically, The S&P, 31% of the S&P right now is Nvidia, Microsoft, Tesla, all those big stocks. The RSP is basically saying, let's make them all the same. So all 500 stocks are weighted the same, and let's see how it is. And you can see that it was down today, but only down 0.7%. And in fact, it had a green candle, meaning it closed higher than it opened. So we gapped down and actually had buyers. This is simply showing that there's rotation in equities. So yes, the big magnificent seven, they're getting slaughtered at the moment. The rest of the stock market is actually doing just fine. That's why I'm looking at this as an opportunity of a bear rally to be able to go and short the yen and short the Swiss franc, but it's not ready yet. It's not ready, so we need to focus on what's actually moving. If we take a look at what we have coming up over the next 24 hours, I want to point out two things. We've got Australian employment report. This is going to be big on the Aussie. We've seen some weakness in the Aussie. Let's see what happens on that. Well, I guess we do have claimant count change out of the UK. If this number is stronger than expected, expect the pound to take another leg higher. We still like the pound on the long side. And we have the ECB rate statement and the press conference. So big news coming out over the next 24 hours on Aussie, pound, and euro. Let's look at the charts on some of these currencies and find out what is our strongest currency and weakest currency on a technical basis. I want to first check in on Bitcoin. This is what I'm talking about here. We've had this big rally from 56,000 all the way up to 66,000. That's more of a 20% rally. Here's what I said this last week. For me to get interested in cryptos, we need to have a rally that makes a new swing high higher than the last swing high, which was this rally right here. As you can see, we're clearly above it. Then what I needed to see a pullback that was bought and a breakout of that level. If we can get that, I will absolutely get back on the long side in the crypto market. Until that happens, it's some nice action. I like it. I'm encouraged by it, but I'm definitely not sold that it's going to hold its rally. So that goes for all the cryptos, not just Bitcoin, but across the board. I need to see this pullback get bought and be able to break out above. So on Ethereum, 3,500. We need to break out above 3,500 before I get interested in going long again. As far as the currencies go, I want to focus here on yen and Swiss franc. This is a daily chart, and you can see we had this rally. And on the currency room, we said, hey, let's let this rally fail, give us a red candle. We need a reversal candle followed by a red candle. We didn't get that. So the rally's still on. The EMA is still going up. The RSI is still going up. The parabolics are still going up. So on both the yen and the Swiss franc, they are really bullish at the moment. You do not want to try to get in there and short these at this point. You have to let them run this course of the rally. Then when it finally turns over, and here's a great example of a rally that happened back here. We rallied for about a month. When it finally turned down, you could see we had a decent opportunity. This wasn't a great turn down, but much better on the yen when we saw a rally, short-term rally that faded. All of a sudden, now we get these really nice shorting opportunities. At this point, I'm going to go back here to the one in April. We had 5 or 6 days, huge rally, and you can see, look at that fade. It just turns into a beautiful fade. We don't know for sure that's what's going to happen to the yen, but that's been its pattern. We just have to let it run its course. Would I go long these currencies? No, because I don't counter trend trade on the daily chart. That's part of my rules. But let's say I had a trader that said, hey, I'm going to do a short-term trade. This is where the momentum is right now. This is where the momentum is on the short term. I do want to focus on dollar because dollar is not doing that. As you can see here, the dollar is looking to possibly break this channel. And this channel has been going back for a long time. If we go back on this, we can see that this channel has been in place all the way since the 1st of April. If we break below that, I really like dollar short. And look, we've had fall, the rally, fall, the rally. For me, dollar is the best looking short out there. So the only question is, I guess, sorry, I'm going to take a look at CAD too, because CAD's a great short as well. But as you can see, CAD is at that support line as well. So dollar and CAD are basically the same at this point. The big question is, what do we go long against it? The Aussie is falling. You can see here the Aussie is falling here. Maybe it finds some support at this area. I'm going to need to see a reversal candle and then an up candle before I can call that a bull pullback. The Kiwi is definitely not in bullish territory. This is just ugly territory. So if anything, I'm waiting for a rally to sell it. So we're getting down the list here. We really only have pound and euro left. Pound and euro are the only two things we can look at. So these are going to be our potential longs here, euro and pound. But if we go into a 4-hour chart, into our momentum, again, we want to be on the right side of momentum. We want to be on the right side of trend and the right side of momentum. We can see that the momentum has actually shifted a little bit. We had a clear move up with this upward sloping EMA. As you can see, it's peaked. We're now headed down. So for me, pound is not ready yet. The euro is looking better because it is only flattened out. It hasn't really turned down, but we're still below parabolic SAR. RSI is still sloping downward. So in the end, I really can't find anything that matches up with a trend and a velocity to go long, which tells me I'm not ready to make a trade. Again, this is the way I trade. I use this to tell me when it's time to trade or not. I'm definitely watching euro and pound for when they do actually have some buying come back into them. I would love to go long them, but until then, if I had to make a play, now again, remember, there's no gun to my head. I don't have to do anything. If I had to make a play, I would be long Swiss franc and yen against the dollar and the CAD. Here is the velocity scoreboard, and you can see this is why I said what I did. This is what's moving to the upside right now. This is what's moving to the downside right now. Great thing is, I don't have to make a trade. I really want to make a risk-on trade in this market. I think it's going to be a much better market trade. So at this point, we've had this little risk off. We've had this little bear rally. I want to let it play out. Then I'm going to be ready to take a better trade. That being said, I'm currently in a pound CAD trade that's still working very nicely. I'm just going to let that thing go to fruition. Once it stops working, it'll take me out of it, and I can move on to something else. So for right now, I'm going to look at maybe one or two potential trades. I'm not crazy about going through these because I don't want to get anyone some ideas because these are not optimal. Everything's not lining up on these as far as trend and velocity go. So the big question is, what's a better short, dollar or CAD? Remember what we do? We pair them up against each other and we look at the chart and you can see dollar CAD is basically flat, which is telling you they're about the same. Now over the past little bit, you could say that dollar's been slightly stronger than CAD. Our EMA is moving up. So that tells us that the CAD is likely the worst one. So CAD, we're going to look at CAD short over the dollar at this point. We had Swiss franc and yen on the long side, so let's put these together. Which is stronger, Swiss franc or yen? And you can see that over the past day or two, we've clearly seen, the past week, we've clearly seen that the Swiss franc is weaker than the yen. The yen is number one over the past couple of days. Look at that. Moving average is flattened out, so it really is sixes. Pick one or the other. We've got yen intervention, which I don't like. So you know what? I'm going to go with Swiss franc. Let's look at the CAD versus the Swiss franc. And this is really the only trade that I think even has any merit. And look, I don't like it. We've got some support down here, right at the 64.50 area. We've already had a big move. Look, sorry, sometimes this happens. I just don't have any trades I even am interested in at this point. I'm going to let the Australia employment report come out. I'll let the UK CPI come out, and I'll go through the ECB, and I will reevaluate trades after that. But for me, I'm not really looking at anything over the next 24 hours. If you are looking for a trade, Swiss franc yen against stuff like Aussie, dollar, or the CAD. That looks to be where the momentum is at the moment. We've got some major news on those three currencies in the next 24 hours. As I said earlier, I think it's best to wait, let those things go through. Hopefully we get some trends and velocity all matching up against each other to make some better trades. Take care. Goodbye, everybody.